eyes gleaming, whose broad stripes and bright stars through the perilous fight, o'er the ramparts we watched, were so gallantly streaming. And the rockets rocking against the bones bursting in us, gave proof through the night that our flag was still there. Oh, say does that star-spangled banner yet wave o'er the land of the free and the
Good Monday morning. This is World HD, streaming live on Rumble, X, and YouTube every weekday at 8 a.m. Eastern Time. Today is Monday, October 27th, 2025. Government shutdown, day number 27. Probably have about another week, I would say, until maybe they actually get serious about this. And it's Currency Monday for us, so we'll take a look at currencies today. We saw the currencies take a hit on Friday. The dollar took a hit on Friday. Off the CPI data that they finally got together and put it out on Friday. And then, so that means everything on the other side of that teeter-totter, all those other currencies went up. We also saw off of the announcement from Scott Bessent and basically the hint that they threw out there that things are going great on this Asia. They expect this Asia tour with that President Trump is now on. Just landed in Tokyo overnight. And this kicks off this 5-day swing through Asia. And with that, the dollar also took another small hit. So this is what the dollar does all the time. It constantly takes little hits. But the funny thing is the trend stays up. The thing hangs in there. You know, it takes it on the chin over and over and over again, but it just always continues to hang in there. So we'll see if that's the case. Again, we'll look, the technicals all look good on this. The concept here is that the concept here is that the world is going to need more dollars. As many dollars it seems like we put out there, and as much debt as we have, still in the end, there's a need for more dollars. And why is that? Because there's so much debt. Okay, so at some point, which one's the reckoning, right? The debt or the dollar or both? There's so much debt out in the world that at some point it gets into this currency situation, right? Where the currency inflation side of things, where people need to pay back that debt, so they need dollars. And the dollar is the most trusted currency still in the world, even with all of its flaws and its constant abuse, right? I mean, the dollar has just been beaten to a pulp, but it still hangs in there. Why is that? Because it's a representation of the people, right? The cultures, the values, the ability to defend a boundary, and the productivity of that country, right? So again, that's why the dollar continues to reign supreme, but it's constantly under attack, right? By the world, by the globalists, by the technocracy, by the pretty much everybody trashes the dollar. There's very few people who are like, cheerleaders for the dollar. I feel pretty alone on that one. Okay, so let's get to it. Hopefully the volume's a little bit better. I tried to make a couple of adjustments. So I tried to bring down the word that I got, and I listened through the Rumble videos, and they seemed okay, but nonetheless, I turned my volume up a little bit and brought down the volume for some of the clips that we have. We've got 4 today, so hopefully they come through pretty good. I checked all the levels. We'll see. We'll keep working until we get this dialed in. There are ways I can adjust it better. I mean, I hate to dive into that. I just kind of turn things up a little bit. We'll see what we get today. All right. Okay, so good morning out there. We got Sven. Good morning, Sven, Rachel, Trumpet, and good to see you guys in here on a Monday. All right. so let's get after this. We've got I want to go ahead and look at the charts. Let's just take a look at the dollar here real quickly. Let's get that, kind of get a picture of this since we were just talking about it. All right, here we go. Okay, so here is our dollar idea. So this is the short term. This is what we were looking at was, can this dollar climb above this purple shaded zone? All right, just a technical level. Let me update this a little bit here. Okay, could it climb above that purple shaded zone and hold above it? We saw all these tests back in here. Let me clear some of this off here so it's a little less messy. So we're looking at what we're looking at are the yellow circles that are going to be left here. Okay, so that was a big area of congestion. I'm just going to get rid of that. We saw this 1, 2, 3, 4 tests on the upside. Finally, the dollar poked through as we thought it might. Okay, then it did. Then it came back, had a pretty deep retest in here. Definitely blew through the purple, but quickly came back up. And then we saw this spike last night off the news that this meeting was going to go through with China and things were looking good on this Asia swing, right? This tour. With that in mind, the dollar took a hit, stocks took a big rally up, bonds took a hit. I'm trying to think what else. I think crude oil was pretty stable. Soybeans obviously loved it. We'll take a look at the soybean chart today. That's what we were talking about. Watch these soybeans. It's a big part of this whole trade negotiation. That, the rare earth minerals, the chips, the NVIDIA chips, the AI play, and then so chips, rare earths, and soybeans are the big things. And then obviously the hidden thing in there, the defense, okay, that nobody wants to talk about, but we know is going on, all right? The whole defense sector, everything that's going on in that Asian rim. Okay, so dollar kind of hung in there. Again, it's sitting right now. If you can see it, let me see if I can blow this up just a little bit. Sitting right on the moving average. Okay, right on this green moving average. So look, everything's still fine. Okay, as much as, again, this dollar just constantly takes a pounding, but it just kind of hangs in there. All right, and at some point, once that happens, I mean, it's like the stone cutter, right? They pound on the stone 1,000 times and it never cracks. Then all of a sudden, out of nowhere, the whole thing just splits open. It's the same kind of a thing with this dollar, right? It's just constant, just when will it crack? Will it either crack on the downside or crack on the upside? I don't think it's any question that we're going to see a failure in the dollar at some point, right? I just think it could fail on the upside and catch most people off guard because, what do we have? There's so many reasons, right? There's so many reasons for that. And I guess just quickly to go through those. One, it's the defense side of things. I mean, now this week I want to go through the war drums are beating pretty hard. If you look around the world and you pay attention to other media, there is just constant drive toward world war. And, Russia and, Russia's releasing these new weapons that are supposedly like, there is no range to them. They can go pretty much anywhere, right? So they have no range. They can, you just dial in the destination, and there they are. They can basically hit that target. So there's so much news like that. Today we're going to cover just a smidge of it with Tusk, okay, the Prime Minister of Poland, because I think he's a critical player in this. I think he was installed in Poland for a reason, to continue to be, one, to get control of Poland, but two, I think to be a protagonist for war, right? He's an installation, okay? And I think they're starting to use him because he was meeting with Zelensky this weekend, looking for funding and so forth, all right? But the key here is, the back to the dollar, right? The real takeaway is the defense of the dollar, the ability of and then the Golden Dome, right? All this concept of the U.S. can defend itself. I think that is a big reason why dollar could fail on the upside. Again, the debt. People need to pay back the debt. They need dollars to pay back the debt. A lot of debt is denominated. Again, the more debt you have, in some ways, like, like Japan. I mean, we're going to look at Japan today too. I mean, their stock market just hit 50,000. The Nikkei 225 cracked a big psychological level of 50,000. And they they can't even sell any debt, right? They can't even sell their own debt. Their Bank of Japan has to buy it all or buy a big chunk of it. So you just have to sit here and laugh that this game, again, it's musical chairs. At some point, the music will stop, and there won't be one chair pulled out. There will be a lot of chairs. There might be one chair left, and there's 50 people looking for a chair, right? So the point is, it's this game of the more debt you have, the more I guess I don't want to say power. The more of a factor you are in the world. So the U.S. has a lot of debt out there, right? Who holds all that debt? Well, we've seen China and Japan and other people pulling in the reins. They don't hold as much debt of the U.S. But see, that's also a weakness in their part too, because they held the U.S. debt too pegged to the currency. So if this currency starts to slip away, they don't have a peg to our currency anymore. So they're going to be a scramble, right? There could be a big scramble to get dollars, right? Because why? Because nobody wants to be the first one to fail. So everybody's going to try to fake it and fake it and fake it and fake it because nobody wants to be the first one because the first one takes the pounding, right? And the second takes the pounding. But once you get 5 and 10 deep into a sovereign debt crisis, it's like it's just another one, right? It's just another domino falling. But no one wants to be that first one because it's just devastating, right? It'll be absolutely devastating, and so will all of them. But I think no one wants to be the first one, right? So again, they'll play the game for a while and they'll scramble for dollars, right? So those are the two big things: the ability of the U.S. to defend itself and how much debt is out in the system, and do they have to scramble to get those dollars to pay that debt, especially any little inch up in this dollar, and it's going to be a scramble for dollars. We're seeing that in Argentina, okay, with Malay and this $20 billion government, you can call it people are calling it a bailout, but it's that, this currency swap, right? And then they're coming back with that was the public side of it. Then they're trying to get the US banks to do another 20 billion. So a total of 40 billion. And again, we're still learning about the structure of this thing. Okay, they put it out there, but the point is, Argentina wants dollars, right? A lot of the world wants dollars, and the more that there's a scramble for dollars, the more this dollar goes, and it literally is the snowball effect, where the more people need dollars, the harder it is to get. The more they get desperate for dollars, and with all this war, is it really going to be kicked off in the U.S. or is it going to be kicked off in Europe, around Ukraine, around Russia? It seems to me that's it, or over in the Asian region, or down in South America. So those are the big hot spots. So it doesn't look like it's going to be fought. Canada's not going to strike, right? Neither is Mexico. So the question is, does a dollar fail on the upside or does it fail on the downside? That's the big question. And what kind of a time frame are we looking at? Are we looking at 3 years, 5 years, 10 years, 20 years for the dollar to fail? And can you make it fail gracefully or partially gracefully, right? That's the other thing, is can you slide in another sort of a higher tech currency to accommodate the needs of the high tech space that we live in, right? This AI driven frenzy, quantum computing, all this kind of stuff. Can you get a currency to kind of take the place of the dollar in a more graceful transfer, handing the baton off to something else? So anyway, so that's that. So the dollar hangs in there. Okay, that's basically sitting on this moving average. Can it move higher? Let's take a look at this. I think we've got these lined up. Okay, let's take a look at the daily on this. So that was a short term. That was like a 4-hour chart. Here's the daily. We've got the energy build. You can see that by the blue box, the blue shaded box. Okay, the red going inside the white. This market has energy, has the potential for a decent size move. Is it going to be to the downside? It's possible, but again, we have this green line, same thing. Okay, we have this green moving average that we're able to kind of sit on to manage the risk against. We know the energy's there. We just looked at the 4-hour chart. Okay, can this thing make a move up to the 100? If it makes a move to that psychological 100 level and can climb above it, and we've got that other moving average up there, right? See that black, moving average kind of curling over, coming down. If the dollar can push up into that level and let this green come up, it'll probably trade sideways. If we get that, we get a push up into this area. See, if we get something, I'd say up into this region, like 102 to 101, I'd say 102, somewhere above 102. If it pushes through 100, quite likely it would go to 102, and then it would come back and trade sideways against this 100 for a while. Okay, it'd be a big news event for 2 or 3 days, and then it would get quiet again. And then it would go sideways for a while, and then we would want to see what really happens. Does it hold that 100 level? And if it does, then we've got that base. Okay, back inside that place where we can manage the risk, and this dollar can get kind of quiet, right? A sneaky move, right? This thing would have to be a little bit sneaky to get past, because again, what's going to happen? The media is going to trash it. It's constantly under attack, right? Okay, so that's a concept with this dollar, right? And then if we look longer term, we've got this weekly, same kind of a thing. We're looking at that 100. Can it get up into basically that pink box? We've got energy somewhat built up. It's hard to believe. It's hard to know if it really released on the downside. I don't think it really did. Maybe it's a false move on this weekly chart. The and it's below this purple line. Okay, so that's a little bit concerning. That's what we want to see it climb back above that 100 level. That's again that purple line's at 100. All right, and then we've got these longer term ones, which we look at all the time. Okay, we've got these converging triangles. So again, 2000 up in here. All right, we've got 2000 back in here. We've got 2008, big points in time. Turn of the century. The end of the long-term capital management, Asian currency crisis, going into the NASDAQ bubble. Okay, that whole era. Then we get this big sell-off in the dollar down into 2008. We get the real estate crisis. Okay, ever since then, this market's been in this nice uptrend. You can see the converging triangle meeting at that pink square right there. And then we also have this just a trend channel, right, sloping to the top. Okay, so we've got, and you can see a couple points on here that aren't even marked. Let me see if I can mark a couple more. So we've got these, dollar found that range, found the range up in here as well. And then you had that spike back in here. And what was this, 2022? So again, this dollar, all in all, okay, it's even though it's on the lower end of the trend channel, and it's just above that pink box where the apex came in of this triangle, it's sitting in a good spot, right? I mean, with all the battering that it takes, it's sitting right in here, and that's not bad. Okay, with again, just constant pounding on this dollar, it still looks pretty good. Okay, technically. Now, if this thing were to hold that level and make a nice push up, you're talking, 115 to 120, maybe more. Okay, something up in this area. A retest of the 2000 highs is something that I'm looking at now. And the beauty of this is that the risk right now is pretty low. Okay, all we're looking at is anything below that pink box. Okay, and that's still a sizable move. Okay, but from where it's at now to get to make progress down and through that where that pink box is at, that horizontal level, then the again, that amount is very small for the potential upside to 120. Okay, so that's what we're looking for is these risk reward ratios. All right, so that's that. Let's take a look at this British pound. I've got a position on that, but I haven't spent much time looking at it today. So we have a harmonic structure on in this, and actually I'm going to see if I can, I'm going to go ahead and add a short there. Okay, keep a stop. So basically I just added to the short position, 2 contract short. And so this is like, to trade this is maybe, I don't know, $1,500 in margin, but it controls $62,000 worth of British pound, right? So essentially what is that risk reward? About, let's just say 1,500 into, was that 40 to 1? I think it's 40 to 1 leverage. So that's the beauty of futures and the Forex markets is that you can, obviously there's a lot of leverage there. Okay. But the key is this, that, while the show is going on, put a tight stop in there. Don't give it a lot of room. Why is that? Because I think we're up at some decent levels here. It's worth a shot. Okay. We've got this newer harmonic structure here. I think this is the newer one. Or is this the older one? This is the older one, right? This is the one that got hit down here with the white dashed line. We talked about that one last week, came down, rallied all the way back up to its old breakout zone. Let me see if I can find this new one so we can get some kind of a perspective on this. I don't know where I have that. Maybe it's, I don't think those are old levels there. Oh, this might be it right here. There's a good chance this is it. So let me see if I can blow this up just a little bit more here. Okay. So here's where the signal came in back in here. All right, and this was on September 30th. So this makes sense. I'm pretty sure that this is the most recent one. Okay, came down below the halfway a couple times, probably the 5/8, maybe even the 6/8 down there. It's a good chance of the 6/8. Came back up into the breakout zone, retested the upper end of this, got below it, retested it a couple times. You can see, here's a move at the 1/8, back down to the halfway, back up to the 1/8. Okay, so it's moving around quite a bit. Now it's back down to the downside 2/8. So it's chopping around quite a bit, but it's below the pink zone. Okay, and is there a chance that we're going to see, a move down into here? Okay, that's what we're looking for, is something down into that range. Now, if we look at this monthly, we can see that a decent energy build going on here. Let me clear this off here. Right, we've got this decent energy build going on right around in there. And can we see a move? And so again, there's a lot of good things about this. That the risk isn't super high for a decent downside move. We can look at this. Let's just put a line in here. Whoops, let me do that. Here's a decent technical spot. So we'll just do this. We've got, came down into there. We had a couple spikes below that level, you can see, but nonetheless, the meat of the trade, the meat of that bottom was about where that yellow circle's at. Then it came back down, retested this, came back down, blew through it, went back up, retested it, went back up, retested it. Okay, and so now, is it really going to give another retest of this purple? If it gives a retest of that purple, it's probably going through on the upside. So again, we're up against it. It's up against the wall here. So can this British pound top out in this area? Back to our harmonic structure here. I think we've got a couple of these. So was it this? I think it's this one. Where I'm bouncing all over. Okay, so again, we can control the risk against this pink shaded zone. All right, and the downside's pretty significant, right? So we could see a move down into this area. All right, so smaller amount of risk on the upside. We know where it's at. That purple line would be kind of where we're looking at. We know we have an energy build there. So things are looking pretty good on the British pound on the downside. Now, decent news out of the UK. So part of what's given this thing a little bit of buoyancy. And then let's take a look at one more thing too. With what's going on in China, we're also going to, no surprise that Australian dollar saw a nice bump too. So let's take a look at that. Taking some heat in this one. Let me, let's flip over to this. So, okay, so I've got 4 contracts short in this. And so I think this one's so this is essentially about $600 to trade it, the futures market. And I think it controls about $100,000 of actual true currency value. So, I'm short 4 of these. So it's 400,000 of notional value, but the actual to put the trade on is like $2,500 in actual margin, what you would need to do the trade, something like that. It's a little bit more to hold it overnight. So maybe it's like 1,800 or something like that. But the point is, can this Australian dollar start to find some resistance in this area? And it's pretty much a mess right now. I thought we had a decent spot over in here, and it's not bad. I mean, it's just kind of chopping around. You could see a lot of chopping around through there, right? It's been very choppy. Then we see this spike, and this spike up, let me blow that up as well. Let me blow this up so you can see it a little bit better. There we go. So you can see we gapped up last night, and it's off the news of a trade deal. Again, Scott Bessent was out. We'll take a look at those clips. But Scott Bessent was out saying that, look, things look good with China. We think we're going to get a trade deal. What's going to bounce if that happens? This Australian dollar is going to be a recipient of that. Now, we struck a deal with Australia last week, okay, with the Prime Minister of Austria. Last week or the week before that. A big rare earth minerals. So what does that mean for China? Okay, again, the reason that this Australian dollar is rallying is because of positive trade with China. Now, we struck that deal. Is Australia in a no-lose situation because either way they're going to sell to China or they're going to sell to the U.S. or both? Are they in a no-lose situation to some degree? Well, that doesn't make a great case for the short in the Australian dollar. But if we look at this thing longer term, okay, it's such a great setup, okay? Like right here, we've got this. You can see a huge energy build occurring with the dark blue, okay, the red going inside the white. And this thing's even bigger than that. It's gotten bigger since we started looking at this. Let me do this. Okay, so you can see that blue, right? The red inside the white. It's got a big energy build. It's been down against that turquoise area 1, 2, 3, 4 times, maybe even a 5th time. Another spike down below. Okay, and this is tricky. There's one spike down there that could have taken out some stops, and maybe there is some upside in this. But the point is this: I think, do we really think that this China-U.S. trade deal is going to go all that great? How many times have we been here where it's like, okay, the deal's here we go. We're going to have negotiations. We've got this squared away. We got that squared away. But sure enough, I mean, China has this 100-year plan. Okay, and who is China? We've been trying to cover that. Who is China? The point is, with do we really think that this is going to go smooth and that all tensions are going to calm down with China? I don't think so. Okay, so I just think that this is a pacifier, right? We got that 90-day extension into November 1st. Can they kick the can down the road into February? Can they get some sort of relief on the rare earth minerals? Will China buy some U.S. soybeans, kind of take the heat off the U.S. farmer, give President Trump a victory, and then but the whole time the war drum just keeps beating over in that region. Okay, and that's what that's not going to get talked about, I think, on this tour very much. Okay, a little bit. You're hearing, Japan raising its amount of defense spending to 2%. And remember, out of World War II, we restricted them to almost no spending on defense of their GDP, right? So whatever their GDP was, they were allowed to spend a certain percent on defense. Really, the U.S. stepped in and we defended Japan after that. Okay, so again, another reason to question World War II in some ways is but that's a whole long story unto itself. The key, though, is, the defense and the war drums beating across this Asian front. I don't think they're going to let up. Okay, so if that's the case, then this Australian dollar is going to take a pounding in this, and maybe it gets caught in the crosshairs between a couple things. Maybe what they're so on one side, it sounds like they're in a no lose situation. Maybe they almost put themselves in a no win by trying to straddle the fence and be China's buddy and the U.S.'s buddy and strike deals on both sides, because that's what they're doing. So again, they could be. It appears they're in a no lose situation, but they could almost be in a no win situation if things don't go well here. Okay, and so again, the dollar looks fairly good. The British pound doesn't look all that great to me. We have the ability to manage the risk. The Australian dollar, the concept looks good. The gap up looks good from last night. They definitely have been the recipient of this idea that they're going to get a trade negotiation, a trade deal. But I just don't. I'm still suspicious of it. So Australian dollar is a decent place to do this. It's a little bit risky, right? It's not a clear-cut path, and that's what you have to do sometimes, right? Is you have to kind of see through it, read between the lines, look through the smoke, look through the fog, and see if you can't see something on the other side. I just don't think this stuff's going to go that smooth. This thing can erupt quickly. Now, is it going to erupt while President Trump's over in China? Is it going to be a blow up? I mean, it's not impossible, right? We know his temperament and his drive, right? His unwillingness to yield even to President Xi. So could something blow up? Possibly. But I doubt it. This thing's pretty orchestrated. I have a funny feeling once they agreed to meet, it was going to pretty much be a slam dunk deal where it's like they've got the rare earth thing, they've got the soybeans, and the chips, right? They'll talk a little bit about these chips, the NVIDIA chips, whatever else, U.S. selling those and so forth. And it'll be a little bit of that back and forth. They'll walk away. They both sort of take a little bit, they both get a blue ribbon. Okay, and they walk away, but I still don't think anything's solved. I still think that China is going to continue to put pressure all throughout that region. Okay, so that's kind of my concept with this Australian dollar. All right, so let's go ahead and take a look at this. Let's go ahead and jump in here and we'll look at the earnings for the week. I want to go through this. So this is kind of what we have on tap for the week. All right, this is kind of a decent overview. So we have, so Sunday, Trump in Malaysia, Asian Leaders Summit. Monday, Asian-U.S. Summit begins. Tuesday, Trump in Japan. But something doesn't seem right with that. I think actually Trump landed in Tokyo, so I'm not sure that this is in order. But anyway, here are the big events of the week. Some of this doesn't make sense to me, but anyway, then we have Wednesday, we have Trump in South Korea. Now, there was supposed to be a deal with South Korea in the works, but it doesn't look like it's going to happen. And last week we talked about India. India was maybe going to be at these meetings, and they were also going to try to strike a deal. And Trump wanted to probably strike a deal with India to put pressure back on China. Okay, so early in the week, it would have been great for him to meet with India, strike some kind of a deal, create some kind of a deal with South Korea, create some kind of a deal with Japan, and then meet with Xi and put more pressure on him. Okay, that's not the South Korea thing looks like it's fallen through. Japan looks fairly good, like that's going to go well, but we saw Indra Modi of India not going to make it to this. Okay, so sort of again, also straddling the fence and not willing to commit. And then Thursday, where is the big deal, right? The summit, Trump Xi summit. And then we have, and I think that's it for now. Let's just go ahead and dive into this. We'll take a look. We got a big earnings week this week. So these are earnings today. So we got Monday in the left, and Tuesday, Wednesday, Thursday, and Friday, each column. So each column is Monday, Tuesday, Wednesday, Thursday, Friday. You can see today we've got some stuff after the close, a few stocks. I'll show you that here in a second. But we really kick off some big tech stocks kick off this week. We can also see we've got like MasterCard, Lilly, some pharma in there, Apple later in the week, a couple oil companies as well, Chevron, Caterpillar's always a big one, GE's been doing quite well lately. So we'll want to look at that. And then here's what we have on tap for today after the close. So we've got Waste Management. So nothing huge today. All right. But this kind of Nucor is an interesting one to watch just from a steel perspective. Okay. And so again, it'll pick up Tuesday, Wednesday, Thursday of this week. And then Friday's kind of light again. All right. And then here are the big tech stocks that we really have our eye on. These guys make up 25% of the market: Microsoft, Alphabet, Meta, Apple, Amazon, Nvidia. So again, it's $27 trillion worth of market cap, okay, is reporting this week. So this has the chance to move this market in a big way, okay, between these 6 stocks. All right. And then I think we're good there. Let's go ahead and take a look at some economic data. Okay, here we go. So for this week, we have a lot of central bank stuff too this week. So I think that's the big thing for this week. Let me, hopefully that works. Okay. Boy, I keep saying I'm going to fix this for good, and then I don't. Okay, there we go. That should work. Okay, so we've got this German IFO business climate today. It came in better than expected. So right when you think Germany's, gonna print some bad numbers, it just magically they come out with a pretty good print. I think we can. I don't know if I updated that. It came out that I think it was about 6 or 7. I did this work last night and I didn't update that this morning. But we'll take a quick look at that. I just saw the headline and I'm like, oh, here it's just I don't know. It's just funny to watch. Okay. Because their economy is not doing well right now. All right, then this week, Tuesday, so that light Monday, Tuesday, still fairly light. Little bit of data, this Richmond Manufacturing Index. I like looking at these manufacturing indexes. We've talked about that a lot. Then the U.S., we get this consumer confidence number that comes out tomorrow. Australia CPI, quarter over quarter. Why do we want to pay attention to that? That Australian dollar. Also, to get a read what's going on in that Asian region. Okay, even though we don't consider Australia Asian necessarily, it is in that Asian corridor, and it does provide a lot of stuff to China and other places in the Asian region. So again, good, interesting to watch. Okay, I think there's something going on with this Australian dollar. And then we have Canada has a rate announcement on Wednesday. They've been struggling, right? We talked about this on Friday. We called off talks with them on its trade deal. Mexico's smart Sheinbaum's just sitting back. She's been really smart through this whole thing, just sitting back and watching what unfolds, keeping quiet, just watching the whole thing unfold and continuing to move forward. She's like, well, I don't know what's going on with Canada, but our trade negotiations seem to be going okay. But Canada not going well. I think Carney was out talking about that this weekend. The trade the relationship with the U.S. will never be the same. So the Canadian dollar, I also have a short on that because thinking the Canadian dollar is probably in deep, deep trouble as well. And we don't know which one will kick it off, right? Dollar on one side, all these others on the other side. All we need is one or two to start the ball rolling, and then I think some of the other ones start to go with it. Okay. And then we get a little bit of housing data. Pending home sales is out on Wednesday. And then we get our FOMC rate announcement on Wednesday too. Again, this one's baked in the cake, 25 basis points. What we're watching for is the announcement will say 25. Then the statement, what's in the statement? Do they change any words? Is there an immediate reaction on that? And then Jerome Powell also talks after that. He'll have a press conference, lots of questions. And from that, is there any sort of a change in the vibe that they could go 50 basis points or 0.5% in December? That would be a big deal. We've talked about this terminal rate was at 3. The market's trying to adjust it down to 2.5. There's a lot of talk on Wall Street of that. We picked up on that with couple people last week or the week before. Paul Tudor Jones was talking about that, and I thought this is something worth entertaining. He's a pretty smart guy. He definitely hears things, and when he's one of those guys you like to listen to when he's out. One, he's an interesting guy, but two, he probably knows some things. So when he said that, it's like, okay, how would they do that? We talked about that. 2.5. And the way to get there is instead of doing 25s, they do 50. And then that gets them to that 2.5 sometime early 2026. Okay, so 25 now, 50 potentially December, 50 January, February, and then finish up with another 25, probably February, March, somewhere in that time frame. Be done. We're going to get a new Fed president by then. We'll talk about that at the end of the show. I've got a clip. I've got a little still on that showing the 5 likely candidates. It's pretty much the same thing. It had a little bit of a shift, but it's pretty much the same 5 candidates we're thinking of. And then Bank of Japan has a policy rate announcement also on Wednesday night. They're probably going to hold steady. We have Sane Takaichi, we'll talk about her in a minute. Their new prime minister, probably not going to rock the boat there. They don't want to go against, right out of the gate, they're not going to go against the grain. And not only that, she's got a huge approval rating right now. It looks like, remember, she barely made it through, right? That whole LDP party about broke apart. They had to scramble to get her through. Okay, now the people are saying they love her. Why do they love her? Because it's going to go back to the same old thing where they're going to spend tons and tons of money and they're going to do defense. So their economy can prosper. That's why this Nikkei is running up. But again, it's all on air, right? It's all on debt that they're just creating more and more debt. So this leads further and further to the sovereign debt crisis. And I mean, I guess we've crossed the point of no return. There's no way to fix this. So in some ways, you might as well just keep on partying until the party stops, right? Till the keg gets empty, and there's no more liquor in the bottles, and everybody's done partying. All the hats are worn out, and everybody's. I mean, I guess in some senses, maybe just maybe that's what we're going to, right? I guess just keep on partying hard. I guess. Okay. And then Thursday, we get a little bit of data out of Germany again, GDP numbers, advanced GDP out of the U.S. That should be interesting. Remember, the target of Scott Bessent was to hit this 3%. I think they hit 3.8 last time. Can they hold this 3%? If so, then that's good in the sense, again, it's good for the dollar because the goal here is to curtail spending and create growth. Okay, so if you can find a way to do that, now I doubt we're going to curtail spending, but at least if we create growth, it pushes out the run rate on this thing further. So if they can get the 3+% and they can hold that, nobody thought they could do it. They've done it before. President Trump's done it before. So I don't know why. Again, it's just like trashing the dollar, right? They always just say you can't do it, it can't be done, and then it happens. The problem is, are we ever going to curtail the spending, or do we have something up our sleeve as to how to get that under control? Again, this gold revaluation that David Rocket was talking about, hitting 5,700. Do they basically displace the Federal Reserve? Do they, who takes the whole reins of that, the Treasury, so forth? Okay, so again, watching that closely, but advanced GDP is important in this whole equation. Then we get Europe. Euro has a rate announcement. They're expected to stay at 2.15%. So again, U.S. would go from 4.25 down, 4 down to 3.754, right? That's kind of the range. And then Bank of Japan is going to sit tight at 0.5% on the positive side, and Euro was at 2.15. And remember, Swiss franc's the lowest, I think, in the world right now at 0. So they're sitting at 0. And does the EU, does Christine Lagarde come out and give a hint that they're going to cut rates too? Because if they cut rates, that's going to put more pressure on Switzerland to cut rates. Okay, not that they're going to do it, but it just continues to. It's like putting more and more weight on their shoulders, right? It just puts more and more pressure on them. Okay, and then Friday we get a couple data points. Canada GDP. Want to watch that again? See how Canada's doing. When will this stuff start to trickle through? The whole automotive space is really starting to backfire, I think, on Canada. President Trump wants to bring that back in the U.S., and he's putting tariffs on large trucks and so forth, things like that, to put more pressure back on Canada. Okay, so when will that start to come through? And then we get this PCE price index. It's a big one that the Fed likes to look at. So again, we'll get the Fed on Wednesday, and then the PCE come out on Friday. So a lot of FOMC speakers will be speaking then, right? We go through these waves where they can't speak as they go into an announcement like this. And then all of a sudden they just unleash them, and then there they are talking again. And so what's the hint that they're going to do that 50? That's what we're going to be watching for. So again, rate statement on Wednesday, then their readout, then the press conference, and then the follow-up to that is all the FOMC speakers coming out. And do they then say, yeah, we're going to cut 50 basis points? That's what we're watching for. If that happens, that could be part of why the market's rallying so much. The stock market, it's already starting to anticipate this 50 basis point rate cut in December. They know that if they do 150, they're not only going to do one, they're probably going to do two, right? And again, that's that terminal rate at 2.5 versus the 3. Okay. And then we get one more data point, U.S. employment cost index. Again, just another inflation read. So a big economic data overview there. Last Friday, we had the CPI data was expected at 0.4, came in at 0.3. There were some notes on this that I went through and I kind of looked at the data and so it came in less than expected, right? Allowing the Fed to keep cutting rates. Remember, they're really not focused on the CPI right now because they can't get it in check. So they're just sort of like floating out there in this 3% when their target's 2. So their target's 2% on inflation. They can't get there. Not under their own efforts. They're going to have to get help from somewhere else, from the economy and so forth. And maybe these tariffs in a roundabout way. There was an issue with the housing. Okay, the housing was up just 0.1%. Okay, it's such a big drop in owner's equivalent rent, and this was the big surprise underneath the surface, right, in the readings in there. So what does that mean? I'm not really sure. That's why we want to watch the housing data. Okay, so we're going to start up with some of this housing data again. We'll cycle through. I think we'll start cycling through the November data here soon, right? Ending October, starting to wind up the new November. So I want to start putting that in there every time we get the housing data. Just build that into our deck and look at that thing. So we're paying attention to it. I want to pay attention to that. Okay. And then, okay, so that was it on Friday. I don't think there was too much. University, so pretty much flat, Flash manufacturing PMI was up a little bit. Flash services was up a little bit. Revised University of Michigan sentiment was down a little bit. And the inflation from University of Michigan readings was flat. Again, I'm not a huge fan of those Michigan readings, but still have to watch them because they do have an impact. Okay, and then today we get China foreign direct investment year to date expected to be down 12.7%. I don't know if that came out or not. I'm going to take a look at that and just see if it did come out. I'm just curious on that. Remember, we've been talking about this foreign direct investment a lot. Okay, so it came in at minus 10.4%. Let me just take a look at that chart and see if it's worth. Yeah, let's take a look at this. There it is. So you can see this is the China foreign direct investment, and it's really been negative. Let's see if we can blow this up a little bit more and get an idea. Okay, so it's actually been a lot more rocky than what I thought. If you go back into 2010, it had periods of up, then down, up, down, up, down, up, down. Big amount of foreign direct investment coming in 2022 to 2023. So this isn't the picture that I thought we would see here. For some reason, I don't. So again, but it's been negative. I guess that's a big takeaway is as of late, since what? I think it turned negative in June of 2023, and it's been holding pretty steady negative. So again, a 10 or 12, negative 10 or 12 doesn't really matter that much. We're talking about right around in here. Negative 20, negative 30. That would be pretty significant. Now, it's sort of stacked on top of that minus 30. So you get a minus 30, foreign direct investment being down. So this is part of the talks of what's going on with China is they would love to get some of this money flowing back in there, and they haven't been because President Trump's been taking all the foreign direct investment from around the world and bringing it into the U.S., going into the tech space, going into all these different investments, right? Remember, Japan gave him a $550 billion blank check under Ishiba. Now Sane Takaichi's there. That's going to come up in these negotiations as these guys meet. As Takaichi, the new first female prime minister of Japan, as she meets with President Trump, I'm sure that this $550 billion blank check that Japan gave to the U.S. to spend on things is going to come up, okay? And we want to learn more about that, okay? What's the intentions with that? What's the new relationship with Takaichi? It's going to be interesting. Again, remember, she's a protege of Shinzo Abe. President Trump was there 6 years ago to meet with Shinzo Abe and had a great relationship with him. And then obviously, we go through the Biden, administration, and I don't know if there was that much contact with Japan really. And that's probably a big part of why they were so weak. Now, let's take a look at this. I want to run this clip here because this is pretty interesting. This is President Trump coming off the and we'll just go do this now, and then because it's kind of interesting. This is him getting off the plane and a little bit of commentary about this trip and meeting with Takaichi.
And right there, on cue again, the President of the United States at 5:10 p.m. Tokyo time, 4:10 a.m. our time, walking down the steps, ready to greet the leaders there in Tokyo. And as we await the President's huge week in Asia, how can Trump use this first face-to-face with the Japanese Prime Minister to navigate, obviously, the thorny issue of tariffs while reassuring that Prime Minister of our commitment to remain a bulwark to China?
Well, this meeting actually is very important for setting the tone for subsequent meetings here, because as you stated, the Japanese and the Americans have an alliance that really underpins the American presence, I'd say the free world's presence in Asia. And this is his first meeting with Prime Minister Takaichi, and it's good that they get off on the right foot, and I think they will. The Japanese are doing more for their own defense than they've ever done. They're increasing spending, and they understand that they need to do something about the trade relationship. So I expect the Japanese are going to announce that they're going to buy a whole lot of American energy, maybe American soybeans. As for the F-150s, I don't know about that.
Yeah, you know, Colonel, East Asia is not an area of the world that is top of mind for Americans on a day-to-day basis. So what could this trip mean for us back here at home?
Well, actually, East Asia is of great importance to the United States. It probably should be at the top of the mind because we've got China, which is out to dominate us, ultimately out to destroy us. Xi Jinping has actually said, one of these two systems is going to survive, and it's not going to be ours. So this meeting and this good relationship that we can get started with the Japanese and with some other countries here is going to very much affect people in the United States. The Chinese have been very clear about their intentions. They always telegraph their punches, and it is an adversarial relationship. Maybe we don't recognize it now, but we will soon enough.
Let's get some specifics.
Okay, so there we go. A little bit on this trip, and President Trump getting off Air Force One, going on to Marine One. How do they get that helicopter there? Do they have these things all over the world? I just wonder, how do you get a big helicopter? Do they fly that helicopter all the way there? I always wonder or do they just have these things around? One in Asia, one in Europe, 3 in the U.S. that they use. Maybe they have 3 in Asia and 3 in Europe and 3 in the U.S. because I think they like to use them like a shell game, right? So you can't tell which one he's on. It's another layer of defense. I always wonder. I see this thing everywhere. I don't know how they get it everywhere. Anyway, okay, so back to this. We've got. Let's finish this up. So again, Royal Bank of Australia, Governor Bullock will be speaking. That actually happened this morning, and maybe that's what created a little bit of that spike in a little bit more in the Australian dollar. And then a little bit more today, Europe, let's see, 5 a.m. We had a couple data points. I didn't see anything big reaction off of those. So again, light week. This Monday's light. So again, we're reaching for straws here to get something out of today's data. There's not that much going on. The China foreign direct investment one was the most important in my mind. Okay, and again, it was pretty much flat, not a major deal. Okay. All right, let's go in here, take a look at the headlines. I think we've been through most of this. Government shutdown. Day 27, big tech earnings. We talked about that. 27 trillion of market cap coming out of those 6 big tech stocks. I think it's 1/4 of the market cap of the S&P 500. So it's pretty significant. This can move the market, right? And we're getting to the top end of these new weekly harmonic structures. Okay, we'll take a look at that. So are these earnings going to beat this 6909? Okay, that was a full upside objective on this S&P, and it went there fast. Okay, it's amazing how this is just, the new signal comes in and bam, off to the races, and there it goes. Okay, and we keep looking for that second wave down. We don't get it, right? We get the first wave down, we get that consolidation, and we think we're going to get a second wave down. We never get the second wave down. Market just basically bottoms out, does it again, gives us another first wave down, consolidation, keeps giving us the false read that maybe we're going to get a second wave down. Nothing. Just keeps pumping higher, right? Over and over and over again. We get these new harmonic structures. We get we're right up, beating up against that 6909. And we see the Nikkei hitting 50,000. So again, we're hitting these big psychological levels all around the world. And, and we'll get into that, right? That's what we're going to do this week as we go through all these different components and watch this whole thing unfold in Asia and go through this stuff, okay? But again, big tech earnings will be big this week. Significant, has a chance to move the market either direction. If we get above that 6909 and we get really good tech earnings, this thing could be off to the races, right? I mean, we could be looking at that really. And the key one I'm going to be watching, again, 7,000, the S&P, the Dow 50,000. We got another big psychological level. Nikkei 50,000, Dow 50,000, right? Those are big psychological levels, and it's easy for them to gun at that. Okay, so once you kind of crest that hill, you can gun for that stuff. All right, central banks having a big week. We talked about that. Trump 5-day Asia tour. Got one more on that, or two more on that. We'll cover that here in a second. Okay, yep. Let me back up. That's where we're at. All right, let's go through this stuff. I had a couple comments in here. I saw Trump had asking if I was going to be going to the World Economic Conference. No, I will not be going to the World Economic Conference. And then, okay, so Trump had a good one in here too. Did Poso go to Poland to support the new guy? I don't know. I don't know if Poso I don't think he supported Donald Tusk. I mean, that would be like blatantly obvious of Poso. But yes, I know he's been over in that region, and he's been. Look, I gave Posobiec credit for calling out Poland as being a gateway for NATO and Europe to make moves on Russia, okay, and that it would be a hot spot. So I give him credit for that. Ever since then, I've been very skeptical of Poso because he just hasn't come through, right? I really thought we had a guy there that was going to be doing good work. Okay, good. Filippo says the volume's great. You can hear me at the gym. All right, that's good. Better. All right, I like better. Let's see. Good morning, TZ Burton. Good morning, Gordon. Let's see. Yeah, I don't like war either. Okay, and Trump said in here, Greg Hunter. So Martin Armstrong was on with Greg Hunter. Always good interviews, right? Martin Armstrong I think he's got a big conference coming up here in November down in, Bonita. I think it's not, where is he? It's somewhere down in Florida. I forget the name of the area. But anyway, not too far from like St. Pete, Tampa. Maybe it is in Tampa. I think he does it in Tampa. Anyway, but he always does good interviews. They're always something in there, okay? And sometimes I think Martin Armstrong portrays himself as bigger than what he is, but then again, I don't know. A lot of these supposed meetings that he goes to around the world at all these central banks is, they're all private, so you can't know for sure. But look, the guy is clearly smart, and it's worth listening to him. He's not always right, but I do think it's worth paying attention to him. And okay, so all right, so we've got that. Then we have look how much China has infiltrated U.S. Canada would be easy target. Hey, Craig, okay, so not attending the World Economic Conference. China launders fentanyl money through Canadian banks. Yes, that's, I don't know a lot about that, Gordon, but it doesn't surprise me. And that would make a lot of sense, okay? That's a great point because that would make a lot of sense. That's a story unto itself. Okay, good morning, Jay White, aircraft carrier. Not sure what that's about. Global Master C5. Good morning. Poso was Rachel Hawk. Okay. All right. So I think you guys are working that out on Poso. Again, I'm not sure. I don't know the details on all that. Okay, so we've got one more clip here to run on President Trump in Asia. And this is him after getting off the plane. I don't know where this is at. Like, he got off the plane, walked over to Marine One, and then I don't know where this was taking place, but obviously a warm welcome, and he's always ready to engage with the people. And so this is pretty cool. So how many world leaders do we know that'll start dancing like that with the crowd getting off Air Force One? I mean, that you have to say that's pretty cool. And look, I want more than anything to root for him. And what's he up against? We don't know. How many neocons are in there? There's a lot of people. I think Martin Armstrong was out talking. Fortunately, it's great. I love the fact that you guys are reading that stuff and bringing that to the chat in here. But I think he was out talking too about how some of the neocons that he thinks are in the administration is Marco Rubio front and center, and then also Scott Bessent. And I've been questioning Scott Bessent because it just doesn't add up with him, right? So much stuff just doesn't add up. Okay, so let's see what I want to cover on here. I think we hit most of the stuff. Trump predicts a good deal with China. Trump and Bissett said they're close to completing this trade deal. Right, Bessett's going to lay the groundwork for it, and then it's going to be formalities with President Trump. Okay, we know how that works. And then, obviously, this meeting with Takaichi, we went through that. She's going to have expansive fiscal policy. I'm sure that's going to be part of the talk, right? The defense, expansive fiscal policy. And Toyota just had like record earnings. So even with all these tariffs and everything else, it really hasn't affected them. They're having record earnings. Okay, so that's going to be part of the talk too. I can't wait to see what they talk about on the automotive front, because remember, there's probably not many American cars driving around in Japan. And so President Trump, he's going to put pressure back on her. It's going to be very fascinating to watch this week, what his agenda is and what he's going to talk about. And he's going to stir things up, right? That is just what he does. So it's going to be really fascinating to see what happens here. Okay. And while all this was going on, I think this is a coincidence, but it is odd. Okay. There were 2 U.S. aircraft from the same carrier crashing into the South China Sea as President Trump's landing and this stuff's going on. So, could it be a one-off? Maybe. Could it be a coincidence? Maybe. But again, just let's watch this week unfold. Okay, let's just see what happens. All right. And I think that covers it on the Asian front. I wanted to, pretty much, I wanted to go through this. We'll run this clip. Let's see. Yeah, let's do this one. Let's go ahead and run this one of Scott Bessent. I want to run this, and then we'll talk about this thing. Okay, here we go.
This was the 5th meeting that I've had with my Chinese counterpart, the Vice Premier, Hu Lifeng, and we covered a wide range of issues, and I think we've reached a substantial framework for the 2 leaders who will meet in Korea next Thursday. So, on the table, the president had given me maximum leverage when he threatened 100% tariffs if the Chinese imposed their rare earth global export controls. So I think we have averted that, so that the tariffs will be averted. And we have a regular quarterly meeting with the Chinese. It was scheduled for November 10th. Or before November 10th. I don't think we will have to have that. So we have been rolling the tariffs quarterly. So we agreed on that. We also agreed on substantial agriculture purchases for U.S. farmers. We agreed that the Chinese would begin to help us with the precursor chemicals for this terrible fentanyl epidemic that's ravaging our country. So I would say that it was a very good meeting overall.
Over to the soybean chart. Let's take a look at this, because again, we know that these are the big talking points with, nothing new. The rare earth minerals, the chips, and the soybeans. Okay, so he was mentioning that 5 times he's met with his counterpart to establish grounds for this trade deal, and supposedly the cooling of tensions. Okay, again, I think they're playing a little bit of good guy, bad guy. President Trump throws out these tweets against China, and then Bessent goes and plays cleanup with Hu Feng, whatever that guy's name was. Again, it's kind of like We Too Low or whatever. I mean, these names are like they're kind of funny, right? Their names are kind of funny. Okay, so so here we go. So this is the wheat. All right. Oh, this is wheat. We don't want wheat. Why? How did I end up on the wheat chart? Okay, here's the soybeans. All right. So this was that harmonic structure we've been watching. All right, back in here, and last night when this came out, I picked up a couple of these, long positions in the soybeans. Like we were mentioning last week, it would have been really great going into this meeting if we could have seen this level, this 976.25 down in here, okay, the bright green line. But we didn't get it. We got the 6/8 right here, okay, on the light green line. We got the 5/8 a couple times in here. And then we were kind of hovering around the halfway, this dark green line. Is it a halfway failure? Maybe. I don't think so. But here's the thing. Is the thing did move up very strong, okay, in anticipation. So here's what was happening. Last week, Scott Bessent's meeting with Hu Feng Wei or whatever his name is. I apologize, but I can't remember the guy's name. It should just roll off the tongue, but it doesn't. So So we see this rally, and you can see it's very strong. Okay, right around in here, I think we were kind of talking about this halfway. Is it going to climb back above here and make its way back up to the pink shaded zone? And it was very strong from where that big yellow circle's at, right here on the green line, right in there. This thing was very strong. And you can see a couple reactions here at the 1/8 again, and then, it hovers below the, this is where it closed out Friday, was below the pink shaded zone. All right. And then we get this gap. You can see the gap right in here. Gap's up. And then the odds of it getting to this 1,061 3/4, the top end of this pink shaded zone is pretty high. I took profit there, got out, sitting tight, seeing if it'll come back down into here. Okay. If not, then it should retest this, I would think. Okay. It should at least retest that. Let's just see what happens here. We got what we wanted. We got the gap up. Okay. Off this trade deal, off Scott Bessent, playing the good guy, striking the deal on the soybeans. We knew that this would become a big part of it. Once we see that thing starting to rally back and it can't get down to the bright green line, you have to question that it's sort of been a little bit short-circuited here, and that the soybeans have become a big issue. They're pushing this thing through. This deal's, whatever this deal is, okay, it's a temporary fix. I don't think we're out of the woods with China. I don't know how we can be, okay? I just think, again, the whole defense and the whole military angle is not going to go away. So this is just Band-Aids, right? We're just putting Band-Aids on things. But for now, the soybeans are telling us that this deal, they anticipate that this deal is going to go through. Now, what we want to see is it hold above that pink shaded zone. If it holds above that pink shaded zone, that's where we can manage the risk, okay? And so worst case scenario, what I would do is I'm going to put a line in here, okay, basically in the center of this, basically in the center here, okay? And let me just make that white so we don't confuse it with anything else. And actually, let me put dots. I'll just turn it into dots. So I'm going to be watching the center of that. Okay, could it come down if we get a spike down into the lower end? So what I do is have resting orders sitting down at the bottom end of this pink shaded zone. Okay, if it holds below the white dash line for very long, then I get concerned. So we're talking about a very kind of a temperamental trade right in this region. This would be ideal. Is something in here that doesn't last long. So a little bit of a spike below the white dash line off some comments, something like that. It spikes down or comes down to the white dash line or just holds above. But the pink shaded zone's the key, right? That's the key. Big picture, that's the key. If the price stays above that, or in the pink shaded zone or above, then this deal's going through. The soybean purchases are going to happen. How big, we don't know. How fast, we don't know. But it takes a lot of the pressure. What's funny, though, is there's so much soybeans building up in the silos, right? A lot of farmers are having to stockpile this stuff because they didn't want to sell at these low prices. So and remember that, we're exiting our growing season now, and South America is just entering its growing season. So maybe this winter season is actually going to be more active than we think because of this trade deal and what's going to happen with the crop in the south, okay, the south of the equator. Probably want to pay more attention to that in most years, okay? And that's what we'll do. We'll pay attention to that stuff and watch South America's agricultural production, right? And see where it's going, see if their prices are taking a hit because of this trade deal. How big is this trade deal? How well will it be enforced? Will China follow through on it? I think it's a temporary fix. I don't think it lasts that long, but nonetheless, the soybeans are telling us this thing's going through, and that's what we've been watching for. Okay. We talked about the South Korea deal, not probably coming to fruition during this trip. And then we wanted to get into this with Milei, and then I'll come back and look at these stocks real quickly. So here's Milei. His party wins in Argentina the midterm vote, and this is largely due. This is a major comeback, okay? It wasn't looking good for them. This gives him a stronghold in Congress, allowing him to push through his agenda, okay? Here he is taking his victory lap, all right? I think you could definitely call this a victory lap. Biden had a lot to do with the U.S.-Argentina relationship. And is there a quid pro quo here for Argentina with this extraordinary bailout? Remember, $20 billion on the front end with the U.S., and then $20 billion on the back end with U.S. banks. Now, the U.S. banks are struggling to come up with the $20 billion. J.P. Morgan was out talking about this last week, saying, I'm not so sure about this. So I don't know what kind of, there's a lot of arm twisting going on here. All right, and what is the deal? Now, we've talked about South America trying to, eject China out of there as much as possible. A lot of pressure on South America. Colombia, Pedro, drugs. Venezuela, Maduro, drugs. Brazil. There's something going on with Brazil, right? And Lula da Silva. He thinks they're going to get a deal. He must be in Asia. He thinks there's going to be some kind of a deal this week that he's going to strike up with President Trump. But remember, President Trump put tariffs on Brazil and Lula da Silva because of what they're doing to Bolsonaro. Bolsonaro is President Trump's buddy, okay? Very much like President Trump, and what I think the Brazilian people really want. So what kind of a deal does Lula da Silva think he's got here? I don't know. This is going to be another interesting one to watch. But nonetheless, Argentina was a major play in this whole thing. And so I think they're taking a lot of flack for this deal with Argentina, okay, with our farmers around the world. A lot of people wondering what's really going on here. How are these deals getting structured with bailing out the Argentinian peso, with the U.S. banks stepping in and providing backstops on all this stuff? And then you've got this whole issue with the Argentinian beef and the U.S. beef. And I mean, this thing has turned into a big mess, but they must be weighing the cost of this, the negative cost, the image cost with this in terms of the bigger picture move, which is Argentina is a great way to get a stronghold back in South America to pressure China out of there. That's what I have to believe is going on, is they're just trying to displace China, right? Basically come in on Argentina, push down hard, and then just try to make that as one of their major ways to push China out of that region. We see this in the Caribbean. We see all kinds of ships, right? We see the ships showing up on the Venezuelan shoreline. We see the idea that they want to basically displace and remove Maduro. So there's going to be a lot of stuff going on in South America. And again, as this unfolds, I keep building up information on this, and at some point we'll do a bigger story on this whole thing, kind of take this thing comprehensively. But that's the gist of it. It's in a wait and see mode. We see that, there's definitely an agenda down here, and Rubio has been a big part of it. And he says, look, we told you we're not messing around, with the drug trade and so forth. And so, we just have to watch and see how this whole thing unfolds. All right. I think that covers that. So here were the ones let me flip over to this. Let me just jump into this real quickly. These are the top candidates for the Fed chair. This was out. We expected this to be coming, okay? Christopher Waller, Michelle Bowman, she's kind of new on this list. I didn't really think she was on there. Kevin Warsh, he was always the one that I thought was the most likely. Kevin Hassett, yeah, possibly, okay? He's the National Economic Council director. Stephen Moran was also in the talks of that. But then Rick Reeder, this was the real surprise. So I think Michelle Bowman and Rick Reeder are the two surprises on this list in my mind, right? Christopher Waller, Kevin Warsh, Kevin Hassett were always there. Stephen Moran's kind of always in the background too, but probably not quite ready yet for him. Little young, not quite the name they need. But Rick Reeder's, this is the one that concerns me the most, because you have Larry Fink, head of the World Economic Forum, okay, and then his like one of his right hand guys, Rick Reeder, now at the head of the Fed, and that would be, to me, that's like, what's going on? Have we? I mean, how are we? At that point, you really have to question again, the Scott Bessent choice and what's going on. Okay, so it's not just very concerning. Okay, and then I wanted to show this one here. This is Donald Tusk. This is where we're going to kind of go with things this week on the war drums beating. And here we've got Zelensky ready for 3 more years of war, says the Polish Prime Minister, Donald Tusk. And they're now in this scramble for the EU to round up money for Kyiv. So we have, Zelensky saying he expects Ukraine to be able to fight Russia for up to 3 more years. The Polish Prime Minister Tusk has told leaders that has told the Sunday Times, Ukrainian leaders reported remarks come as the EU looks for new ways to fund Kyiv, eyeing Russia's frozen central bank assets as an option. Now, we've watched this go on, okay? They've been going after all the Russian assets that are offshore, and they're using it, we saw this with the G7 before President Trump came in with Janet Yellen. We've seen it since then. We've seen Europe do this in many different fronts. So they're just continuing to, I mean, not only is NATO putting tremendous amount of pressure on Russia, but then you're also doing this financial pressure. And I'm not even sure that it's just, I don't even know what the word is for it, really. But keeping going on with this, in an interview with British newspaper on Saturday, Tusk quoted Zelensky as saying that he hopes the war will not last 10 years, but that Ukraine is ready to fight for another 2 to 3 years should the conflict with Russia drag on longer. I think they want, I mean, I almost think it's inevitable at this point that it's going to drag on that much longer, unless President Trump can pull something crazy out, and because there's just so much going on behind the scenes on this. All right, Zelensky is anxious about the toll the war could take on his population and the economy, said the Polish prime minister. And so essentially what they're saying here is Ukraine has serious financial problems, and they're going to need Europe to continue this war. They can't do it alone, right? And that's the key, is when we see this war continue, it's because Europe continues to fund this thing. Hopefully, we're not funding it anymore. I know we're funding it potentially with guidance systems and long-range missiles, the Tomahawks, the ATACMS, all that kind of stuff. Hopefully, we're not funding it financially. We're not supposedly we're not being told that we are. And where are they going to drum up the money? They're using basically Russia's money to fund Kyiv to fight Russia. So, and then Russia's obviously selling energy into Europe, and Europe's paying Russia to essentially fight Ukraine. So this is like really a banker's war if you really think about it. The question is, who is running this? Because again, it's on both sides. It's being funded. This thing is clearly being funded, and it's mostly off energy. Okay, and what do they want out of this? Right? We've talked many times about what they want. I think they want to break Russia up, right? And they want the war because that's what gets them out. That's what allows them to clear the slate. They can clear the slate. They can generate revenues off of it, right? They can cover up their bad economies in France and UK and Germany, pretty much across Europe with a war, and that's why they need it so badly. And they're going for broke on it, right? That's what they have to do. Okay, so I think that gets us through. I wanted to look at Fed chair finalists. Okay, so we did that in the war drums. Okay. All right, great. The one more look at the stocks. Let's go ahead and take a look at the stocks. I want to look at this S&P. Let's go here and okay, so we had this big gap up. Hopefully I have this marked on here. I don't know if I have the 68.12. I think this is what we got on Friday. Yeah, perfect. Okay, let me squish this down a little bit. Okay, so we had, I wonder if I have these levels. I wanted to put these on here. Let me see if I can get this real quickly, and we'll just put them on here together. Okay, here we go. All right, great. Okay, so here's the halfway, 68.12. That's the dark green line. So again, we spiked through on the CPI data. Okay, we had that big spike up. And then it came back in, retested the 68.12, and tested it, looks like a couple times here. Okay, we got 2 tests right there. And then we came back and retested it here later in the day again. And definitely some divergence kind of building in there. But anyway, the market sort of kind of limped into the close on Friday, right, going sideways. And then we get the announcement coming out, right, that, Scott Bessent saying things are looking good, right? And then we get the gap up Sunday night. So remember, we had the Friday before, we had President Trump releasing that thing at 10:57, crashing the market. The next Friday, we get bad news coming out on China. Last Friday, not this other Friday, but the Friday before we saw. So it's been 3 Fridays in a row, right? 3 Fridays ago, we saw the 10:57 a.m. post from President Trump. When the liquidity was drying up around the world, markets got hammered. Scary weekend. Markets gap up Sunday night. The next Friday, it's 2 Fridays ago, we see the market come down again. And in the morning, right, pre-market, right, market sells off and then it recovers, right? And then this Friday we go in wondering what's going to happen, and sure enough, we get this gap up. So was this a fake left, go right kind of a thing? I don't know, but it just feels pretty orchestrated to me, okay? And it's pretty much all been, it just feels pretty orchestrated, okay? So let's mark these things on here. Let's just do this. We'll wrap it up with this. So we've got 68.12, okay? We've got 68.36 is the other level. Let me see if I can find this quickly. 68.36. I'll just rough them in there. So there's that one, 68.36. We've got 68.61. There's that one, 60. That's the 68, 68.61. Then we've got 68.85. There's that one. And then we got the full upside objective at 69.09. Okay, so there we go. Roughly speaking, so let's just go ahead and mark these. So this is our full upside objective here. Essentially, this is the 7/8 right here. Okay, this is the 6/8. And then what we'll do is take a look and see what actually got hit here. This one, okay, and then we've got this. Okay, so again, close around this 5/8. Let me just mark these. So Friday we sit, here's the 5/8, sit around the 5/8 all afternoon, sell off a little bit, and then gap straight up to the 7/8, holding around the 7/8, holding around the 7/8. So we might see a little bit of a pullback in here today, okay, on the open. Maybe the thing pulls back into here, okay, something like that. But ultimately, this thing's in pretty, or maybe it just goes straight up to the 69.09. We want to watch if we get to the 69.09, and it looks quite likely that we will. What happens there? Does the market get rejected? Remember, we got big tech earnings coming this week. Okay, we've got this Asian thing's probably going to go fairly smooth. We know Modi's not going to be there. We know South Korea deal's not going to get done. So those are the two spoilers on the trip. Okay, but everything else, Takaichi's probably going to go really well. The conference is going to go pretty well. Still going to go to South Korea. Still going to meet there. Going to meet with G. Okay, and it's pretty much in the bag that it's going to be the soybeans, the chips, and the rare earth minerals, and the defense behind the scenes. We've talked about that all day. And then the question is, with the big tech earnings and the FOMC, remember, 4 central banks meeting this week: U.S., Bank of Japan, European Central Bank, Bank of Canada. We're going to follow up next week, I'm sure. I think UK is probably coming soon, and some other big ones. That being said, we got a lot of that going on. We've got the big tech earnings. What happens is 69.09. The market climbs above that and holds. We're probably looking at, let's switch over to the Dow here. I think we did have the Dow marked. So here's the Dow, same kind of a thing. This is the Dow weekly structure. Okay, there was the halfway. You can see a little bit of reaction here at that. Hung around the 6/8 a little bit, gapped up and through the 7/8, and it actually maybe hit its full upside objective, or really close, at this 47,797. I think it came up just shy. Looks like the high on it was spiked up to 47.78 basically, and the high in the 47.78, and the full upside objective is 47.79 or 47.80 basically, 47.80. 47,800. I'm sorry, 47,800, and the high was 47,775. So what is that, like? 25. 20 some points away. So it's essentially hit it. Now the question is, what does a Dow do there? Remember, it starts to crest this level, this 47,797, 47,800 basically. I was saying 48.2. We crest that, and it's probably got the 50,000 in its sights. Okay, if it crests 47, now we can bring it down because we have this harmonic structure. So now if it crests 47,800 and it can hold above that, to me that feels like this thing's gunning for that 50,000, that big psychological level. Just like we saw in the Nikkei, right? The Nikkei 225. Let me see if I can pull that up. Here's the Nikkei. So you can see this thing right there. It just cracked 50,000. Okay. Where is that thing? There it is. Okay, 50,000. There's 50,000. I'm not sure I can get it right at 50,000, but that's essentially it right there. So you can see this thing just hit it. And back here in, 1980s, when Japan was on fire, 1989, back in this area, it was at 30. That was basically 40,000. So we see this big, long, grind in the Nikkei. It sells off. We get a big sideways grind, and then we get this rally just really since 2018. So this would have been about the time President Trump was in Japan last time, on this breakout, when he was meeting with Shinzo Abe and so forth, right around this time frame, 6 years ago. So right around in that time frame would have been his last meeting with Shinzo Abe. Now he's got Sanae Takaichi. Okay, and we're going to see what happens. Again, quite a bit of jumping around in here from that yellow to this. That's when the carry trade went off. And then this move up. Just let me show you this. This move up has just been staggering, right? I know maybe it doesn't look that, but this is a big deal here. I mean, this thing has just been ripping. Okay. And remember, when they float debt, nobody buys it. Their Bank of Japan buys it. So this has got to raise red flags all over the place. Nonetheless, it just cracked this 50,000. And so is our Dow going to do the same thing? Is it going to make a run at another big psychological level? And to me, that's the biggest psychological level out there is the 50,000, right? 7,000 in the S&P, 7,500 in the S&P. Like that doesn't really register with people, but 50,000 registers. You know what I mean? Like people, they know the Dow, right? If you quote a stock, put it this way, people have reference back to the Dow. If you say the Russell 2000's at 2,500, it means almost nothing to people, right? If you say the NASDAQ's at 22,000. It means almost nothing to people, right? They might know NVIDIA. They know the names, Google, but they don't know what the price of Microsoft is or Google or Amazon or these. They don't know. They just know that they're going up, And so the general public, right? So this 50,000 is a big psychological level that it gets in the head of everyone, right? Almost everyone can hear, 50,000 in the Dow, So again, this is that big psychological thing. If we crest that 47,800 in this Dow, boy, it just almost starts to look like, we're going to start gunning for that 50,000. All right. And let's just since we're looking at that, let's take a quick look at, just curious what Bitcoin's doing. I haven't looked at that this morning either. So it's basically hovering around this 115. Now, one of the things is this Bitcoin's been correlated to the stock market. Risk on, right? It's a risk on asset. So risk on, it's gone higher. Risk off, it's gone lower. And a lot of times it's been a precursor. Sometimes the stock market leads Bitcoin. Sometimes the Bitcoin seems to lead the stock market. It's hard to know which one's the leadership there. But will this Bitcoin rally with it, or is it gonna break correlation? If the Dow's gonna rip, maybe Bitcoin doesn't. Let's see what happens with that whole front. Okay. So I didn't really think we had that much for the show today, but that was quite a bit. So let me get rid of this and see if there are any other comments real quickly, and then we'll call it a day. And okay, so we've got here, let's see, Chinese pro hackers. Flax Typhoon enters your computer through any internet. Okay, so we got some good talk. I'll have to look back through that. My Toyota will be 25 years old on January 1st. Well, I have a 2001 Toyota Tundra too. So for a work truck, and I love the thing. It's been through the ringer. I had it dialed in like 2 years ago, and I got in an accident, and I ripped the front left wheel off, and now I've got to, it's in the shop actually today, having some work done on it. I'm got to get back on it. I've kind of let it slide, but I really want to get it back dialed in. Okay, so David Rocket, Chinese pro hackers. Rachel, why does that not surprise me? Okay, let's see. Security cameras, commercial mapping. Haven't they done it? Okay, so I saw. All right, great. So I'll look back through some of these. My 50,000 level mainstream media will try to say President Trump had nothing to do with it. Yep. I think you're right, Trumpette. They will try to say he had nothing to do with it. That's almost a given. Okay. All right. With that, tomorrow we'll look at debt. I don't know what we'll do tomorrow on the debt front, but there's plenty to do. Trust me. It's just a matter of what's interesting. There's a lot going on in the corporate space. Maybe we'll do something with that, right? We see a lot of corporate debt issuance coming out right now, probably to chase this AI thing. Again, it's a go for broke mentality on the AI front, and we're seeing it in the corporate debt space. And it's short term, not a problem. Spreads are tight. Everything's great. Seems to be money. People aren't afraid of it. Problem is that stuff can turn pretty quickly against them. So again, we got the key levels in the stocks. We'll take a look. We'll for sure look at the 10-year note. 10-year note took it on the chin last night when this whole announcement came out, right? It's been flirting with the halfway. We've had those targets. It's just really struggling to rally. I mean, this 10-year is really, really having a hard time. So we'll look at that for sure tomorrow, maybe get into some of this corporate debt stuff. All right, with that, have a blessed day, everyone. And we will see you tomorrow, I think. There we go. Okay. And I don't even know what I have for music here to play out, but we'll play something here. Oh.